This is the Silver Divorce Podcast, broadcast from the Whitfield Media Group, studios, and Optimize You. We offer education, stories, and support for people age 50 plus who are considering or facing divorce. I'm your co-host, Lisa, and before we get started, I want to encourage you to go out and like us on Facebook at Silver Divorce Podcast, or if you have questions, topic suggestions, please email us at silverdivorcepodcast@gmail.com. Before we introduce our special guest, I'd like to give a shout out to my co-host, Pat.
Well, hello, everyone out there. I'm so glad you joined us today. And as always, we have some great topics to discuss, and we've got a really good one today.
That's right. But before we get started, we're going to introduce a new feature today, and that's called Out of the House.
Yeah.
You know, one thing that we've learned and even experienced ourselves is when people are newly divorced, sometimes they experience a lot of isolation. You know, you lost your social partner. You lost the person that you go to dinner with, that you go to concerts with, movies with, and you don't know what to do with yourself. And so you tend to just stay at home. But, you know, it's really important to get out and start experiencing new things. So we thought, as a way to let you get to know us a little bit, we'd start sharing some of the things that we've been up to. And we hope it can spark some interest from you, that maybe it can give you an idea of some of the things that you can do and start to enjoy a social life.
Oh, yeah. We were just at the bowling alley yesterday, and it's a senior group, and we play no-tap bowling. And that's where if you get 9 pins, it's a strike, and it is so much fun. It's a great time to meet people and have fun.
Yeah, I have to say I was not a bowler, and only at kids' birthday parties, and Pat asked me to join, and I thought, senior bowling? I'm not sure I'm at that level of senior yet, and went and have had a great time. So it's just a good way to meet people.
Absolutely.
Yeah. And I also got out of the house and took a nice walk at Harrison Bay State Park. If you're not familiar with that park, it's 25 minutes from downtown Chattanooga, and it has a lot of campsites, but it's all around the lake. You have gorgeous camping, also a lot of walking trails. And so, you know, I managed to take a 5-mile walk and stop along the way and talk to a lot of different campers.
Wow.
And it was really a nice time. So.
Yeah. Last time I visited you, I went over there and walked and saw deer. And back in my earlier days before I got divorced, we camped over there a lot. It's beautiful.
It is beautiful. And I even managed to talk to somebody about Silver Divorce Podcast.
Oh.
And seems like wherever I go, there are people who are kind of know someone going through divorce or experiencing it. And so it was just a really nice time to get out of the house.
Awesome.
Yeah. So let's jump in today, Pat, and let's get started.
Okay. But Lisa, before we get started, as always, I want to let everyone know that we are not attorneys. We are not counselors, and we are here to share our experiences and education we've gained to help you avoid the pitfalls of the divorce process. And while we share true stories, we change the names to protect everyone's privacy. So, Lisa, what are we going to talk about today?
So we're going to talk about unique financial issues in divorce when it's related to small business owners and entrepreneurs and self-employment. You know, we know that there are some 10 million adults in the U.S. who are self-employed, and about 31 million entrepreneurs or people who started their own business from scratch and grew it to a nice entity. So as you might imagine, in a divorce, that's a whole nother set of unique issues. And, you know, they have to think about division of assets, but then also how do you manage dividing up a business that you created together? And sometimes they still want to work together, which is also complicating. Then in a long-term marriage, there can be hidden assets.
Yep.
You know, maybe one person was building a nest egg and the other one didn't know about it. How do you find those hidden assets if you suspect that's happening? And who is the person that can uncover all of those for you? So I'm very pleased to welcome today Shannon Farr. Shannon is a CPA, ABV, a CFF, and she's with Elliott Davis. And let me just tell you about her. She's got some excellent credentials. We're very excited to have her today.
Thank you.
Yeah, she specializes in the area of forensic accounting, business valuation, and litigation support services. She also recently served as a national professional leader in forensic and litigation services. I think you just spoke at a national conference, didn't you?
Well, actually, that was a conference of Tennessee and Alabama attorneys.
Oh, wonderful. Yeah. So you've been a CPA since 1993.
Yes.
And you spent 30 years working with small business and their owners, and the last 18 you have devoted to forensic and valuation services. So
Yes.
I would say that you probably have seen it all and know it all, right?
Well, I don't know. I wouldn't say that I know it all, but I definitely have seen a lot over
Yeah.
the years. That's for sure.
Yeah, unfortunately, we know that 50% of first marriages and 60% of second marriages end in divorce. And there's a high probability that a business owner will face this issue.
Yes.
So for anybody, divorce is traumatic, it's painful, it's costly. But for those business owners and entrepreneurs, it can have a significant impact on their cash flow. But then also their ongoing operations.
Yes.
Their employees can be very fearful that they may lose their jobs. But then also the business can be faced with competitors kind of coming in to swoop their employees because they know the business is at risk. So can you share with our listeners the top issues you see when business owners and entrepreneurs divorce?
Sure. So I like to tell people that divorce is probably the most significant financial transaction that you will go through in your lifetime. And unfortunately, it occurs at the same time that you're going through one of the most emotional times of your adult life. So I do think it's important to get a good team of professionals, an attorney, a financial expert, because people like me, divorce attorneys, we do this all the time. Whereas hopefully when someone's going through a divorce, it's going to be the one and only time that they go through that divorce. So in terms of the biggest issues, I think you did a good job, Lisa, of mentioning the primary ones. We often see people who own a business. Obviously, one of the biggest questions is, what is this business worth, and how are we going to settle the marital estate in a fair way? And that does put a lot of stress on the business owner in terms of being able to make sure that they continue the business after the divorce. I think it's particularly complicated if both spouses work in the business. Frankly, I don't see that quite as often. There's usually one spouse that's taken more of a lead role. Often the other spouse has taken a more supporting role, but as the relationship, the marriage has broken down, many times that has also been seen in the business relationship, and one spouse has really plugged more into running the business, whereas the other spouse has maybe withdrawn somewhat from that process. I do want to point out that, even in that situation, it's still a marital asset because both spouses have contributed to it, maybe not necessarily in the same ways, but if the business was started or increased in value during the marriage, that is a marital asset. So, there are different and creative ways to settle the marital estate to ensure that the business can continue as a going concern. That's certainly the goal. I would also encourage business owners who are feeling the stress from the divorce process to enlist a psychologist or a therapist or a coach or someone to provide the kind of perhaps emotional or psychological support at the same time.
Yeah.
You really need a team because being a small business owner is a lot of stress. And, most small business owners kind of work their business 24/7. So going through the divorce, definitely not only the time that it can take up by attorney meetings and depositions and responding to requests for production. So, there are additional demands on the time in addition to those demands on you emotionally, especially when kids are involved in parenting issues. I really hope that most people going through a divorce will reach out and get a team of people to support them.
Yeah, I was on a Zoom call, 2 different Zoom calls with women who were small business owners with their husbands, and they were going through a divorce, and it was a case where the husband said, this is what I'm going to give you, this is what I'm going to pay you, and they had no idea that there were other options. And I looked at a 2024 Forbes survey that said 1 in 20 businesses will actually close due to the financial strain of a divorce. But there are options for how you can handle that private business in a divorce. Can you just share with us what those options are?
Well, sure. So what you really need is to look at the entire marital estate, meaning all of the marital assets and liabilities. And if there are additional significant assets beyond the business, that makes it easier to settle the marital estate and ensure that the business can be awarded to the spouse that's primarily involved. As an example, in a small marital estate, there may be the 2 main assets might be the marital residence and the business. And so in that case, the 2 spouses may work toward one spouse keeping the marital residence and the other spouse keeping the business. And then, of course, there may be some equalization that needs to occur as well. And one way to do that would be if the value of the business is the most significant asset for the settlement of the marital estate to occur over some period of years. And we see that quite often because usually, the business owner cannot liquidate half the value of the business immediately upon coming to terms in the divorce. So, there are different ways to settle that over some number of years.
Yeah, that might be one of the reasons why so many of the businesses fail, because if the one spouse doesn't agree to a liquidation of assets over a period of years, then are they faced with having to sell the business or find another means to pay out that spouse?
Well, so I would say it's pretty rare, at least in my experience. I know that you had the statistic that 1 in 20 businesses will close. I don't think I've ever seen a successful business close due to a divorce. Unfortunately, a lot of times what we hear during the divorce process from the business owner is that their business is not doing well. It's kind of the divorce disease. I wish I had $1 for every time if I was working with the out spouse, the non-business owner spouse, to hear, their business is just in the toilet and, they expect it to go out of business and it's really not doing well at all. And they're not able to pay themselves out of the business what they've traditionally been able to pay themselves. It's all a lot of doom and gloom that we hear, but most often that's temporary and/or I can tell some stories about how that's been fabricated. So, I think the best solution is for people to pull themselves out of their emotions and think about what I try to tell people is think about what you want your life to be like after the divorce.
Right.
And if you can think about what you want your life to be like after the divorce, you don't want to continue these arguments and bad feelings that are so prevalent during the divorce process. And, I've frankly never seen the court order a couple to sell a business. You might see that. Sometimes the court says you guys need to sell your house so that you can split the proceeds from the house. If one or both spouses is, essentially making their living through their business, which is the most common occurrence, the court's not going to take away that method of earning a living. So there are usually other ways to settle the marital estate other than the business closing. Now, if a business is not doing well, and it really has not been doing well for several years, I do think divorce could be the impetus to go ahead and close that business and start fresh in every way.
So if you're that woman who, you co-own a business with your husband and he says that he wants a divorce, or the other way around, and perhaps he says, well, I'm going to pay you this much money a month and I'm going to keep the business going. What are your options? What should you be looking at? You may not want to just take what that person is saying, but should you seek out a business valuation? Should you have a certified appraiser? What are some of the steps that you would advise somebody to do instead of just taking what the one person says that they're going to do for the business?
I'm so glad you asked that, Lisa, because I see that so often, especially when one spouse has been, more involved in the family financials or the marital financials, and they'll want to kind of shortcut to, here's my proposed solution. And unfortunately, a lot of times that comes with, let's not get lawyers. Lawyers cost so much money. Let's not get business valuation people involved. That costs so much money. Here's the solution. And they'll propose that, just like you said, I'll keep the business and I'll pay you an amount per month. While that may be a logical and fair solution, it's really important first to quantify the marital estate. And, if there are complicated assets or a business involved, then that's where someone like me can come in, because yes, you do need to know the value of the business, just like you need to know the value of your house. If you have investments in publicly held companies, it's really easy to know what those are worth as of a particular day. It's a lot more complicated to know what a closely held business is worth as of a particular day. Sometimes couples need, especially the spouse that hasn't been as involved in the financials, they need help just identifying what assets are there. I was involved in a divorce where the husband actually had a 401k plan that he had not disclosed and the wife didn't know about at all. And that 401k plan was a significant marital asset and needs to be considered when dividing the marital estate. So, essentially, we go through a process of starting with just the traditional bank accounts, any investment accounts. Obviously, if there are business accounts, sometimes we search for those businesses using Secretary of State records. You can do searches for real property, look at the debt side of the equation, and then at the end of that process, what you should have is a good idea of what that marital estate is worth. And then think about, on the other side, the second step is to think about alimony and spousal support, which is a separate calculation and a separate consideration. And the courts vary widely on awarding alimony and spousal support. And it depends on the length of marriage and a variety of other factors. In Tennessee, there are actually 4 different kinds of alimony. So that's could be another podcast in and of itself. But the point is, that's really a separate consideration. And then you can look at, okay, well, I'm getting spousal support, but I still need to settle my half of the marital estate. And so that would be potentially paid out over some amount of time, and it depends on what other assets are available, in addition to any spousal support. So that's where I'm saying sometimes I feel like there's a shortcut where one spouse is saying, I'll give you this much per month. Well, that spouse may, if they go through the court system or even through, just hire an attorney and go through the mediation process, they may be do spousal support in addition to their half of the marital estate. So,
Yes. So if they don't actually have a business valuation expert come in, they're not really going to know
Exactly.
what they should be entitled to, especially if they were kind of the spouse who, wasn't really running the business day to day.
right.
And then, you're relying on the person who is running the business to honestly tell you what the value of the business is. So
Right.
just really highlights that importance of protect yourself, have a business valuation expert come in and determine that value. But one question, Shannon, I had is if they're doing that business valuation, is there a consideration for future revenue? Like if that business is a growing business and or is it just here's the value on the date of the divorce and here's how it's going to split? But,
Yeah, so that's a great question. In a way, yes, because every business is valued based on their expectation of future returns and not what they've done in the past. And the example I like to use there is if you think back, I don't know, 20 years ago when BlackBerries were so popular. And for several years, the firm that made BlackBerries was extremely successful. And so that was their past history. But today, you certainly would not invest in the company that made BlackBerry. So when we invest in companies, we aren't investing because of their past history. To the extent that their past history informs what will continue in the future, yes. But there's an exception to that because really post-divorce efforts are not supposed to benefit the marital estate. Once you're divorced, you're divorced. So to the extent that you have a business, let's say it's grown to 5 locations at the date of divorce. And in the next 5 years, they want to grow to 15 locations. So I wouldn't expect that business owner to value the business based on the 15 locations that they may or may not have. That might be their goal, but that's not the state of the business as it exists as of the date of divorce.
Yeah, that makes sense. So it is the business valuation at that time. So it is really important to take the time to have that work done. And then my other question would be, who does that work? And how is it paid out? Is it like a percentage of, or is it an hourly rate, or what as a business owner could I expect to have that work done?
So, yeah, that's a great question. And one thing I do want to point out, going back to something you said a minute ago, about as the out spouse, don't necessarily accept what your business owner spouse believes is the value of the business. What I've found is most of the time, business owners don't have a really great idea of what their business is worth. So I don't only do business valuations for divorce. A lot of times I'm doing business valuations for, right now I've got 2 going on for people that want to make an offer to buy a new business. And then I also work with people that are looking for a succession plan or want to retire. They want to bring in a partner or they're ready to sell their business. So it's not just the out spouse that needs to know the value of the business. It's the business owner, him or herself as well. And so there are a lot of people who are CPAs that have gone through a process like I did to be accredited in business valuation. There's several different credentials. So, that's one way to look for someone to value your business would be for CPA firms that have this type of consulting practice. There are also business appraisers that essentially have firms, and that's what they concentrate on. There's a fairly large one in Memphis, for example. There's not one that I know of here in Chattanooga that just concentrates on business valuations. But I would definitely recommend that you get someone credentialed. As far as the fee, No, it should not be a percentage of the business. You might find that if you hire a firm to actually help you sell your business, they may price it that way, that they will get a percentage of the actual proceeds, more like a commission in a way. But to value a business for divorce, it's based on, it's usually a flat fee, and it does consider the number of estimated hours that will go into it. But then also, we subscribe to a lot of databases and industry research, economic research. So, we've built in the cost of all of those resources that someone who doesn't have a full-time valuation practice, would have to somehow get that information to be able to come up with a estimate of value. So sorry, that's a long.
Like it's a complicated process, but it's absolutely necessary, right?
It is,
so that everybody knows the fair value and the assets can be distributed.
Absolutely, that's the goal, right? Yeah, that's the goal, is to come up with a conclusion of value, fair market value, what a hypothetical buyer and seller would transact at, in an open market. Mm-hmm. So that does take a lot of procedures and a lot of data, but, I hate to throw out figures here while we're on the call, but it does depend on the complexity of the business as well and the quality of the records. So that can be a challenge with small businesses that don't necessarily have great records, because when we're going into value those companies, sometimes there's some accounting type corrections that need to be made, and that can be additional cost. Mm. And the other thing I would point out is usually you can get a business valuation and you don't pay for the expert witness services unless they are actually required. So, I wouldn't charge anyone for appearing in court unless I actually appear in court. And so at that point, it would be an hourly rate.
Yeah, it's really like your attorney. I mean, mm-hmm. You pay your attorney a retainer, and however many hours that person spends working on your case is what is subtracted from your retainer. So mm-hmm. Very similarly, it sounds like.
It's very much like that,
yeah.
Yes.
Mm-hmm. So then I just want one more question on the valuation. If there is a spouse that is the controlling, he or she's there every day, they're running the operations, but the other spouse is maybe at home, when they go to split that, is there a weighted value for the person who's actually running it, or is it strictly related to, this is a marital asset, here's how it should be split, just like all other marital assets? Is there a consideration for the person who put the blood, sweat, and tears into the business?
Well, so Tennessee does have a statute that addresses the division of marital property, and specifically this issue. And it says that the homemaker, the spouse that took care of the children, took care of the home, that their efforts should be weighted equally when dividing the marital assets. So it's not necessarily weighted equally when it comes to the business itself, but that those contributions should be weighted equally. So with that said, and when I say equally, I should say equitably, because what the statute requires is an equitable division of assets. So I think there's somewhat of a presumption that the value would be split 50-50, but then there are arguments, of course, that one spouse should receive more of a higher percentage than the other. And, frankly, those arguments can either be negotiated through settlement offers or in mediation, or, if you end up going to trial, then the judge will make that decision.
I remember my attorney saying that in Tennessee, generally in a long-term marriage, even though the statute says equitable, they pretty much view it as 50-50 if it's a case of a long-term marriage. So just one thing that I remember her saying to me.
In my experience, that is the presumption, but there are exceptions, and the facts and circumstances are extremely important. That's one thing I do want to stress is, every case has its own set of facts and circumstances. So sometimes I see people or hear people say, well, my friend got this, or, somebody I know got this, and that may have been what was equitable in that case. That doesn't necessarily mean it fits your own facts and circumstances. So going back to my point about needing that team.
Okay, well, I have a question as a follow-up. If there is a transfer of property as a result of a buyout, what are some of the tax implications that should be considered?
That's a great question, and it comes up a lot. And the good news is any asset property that is transferred as a result of the property division is not taxed. So there are no tax consequences. One thing that, as you are divorcing, that needs to be taken into account is that you would also, whoever gets that property would also get the basis in that property, and there may be trapped in capital gains. So let's say, for example, a couple owns rental property that they purchased several years ago, and obviously that house today is worth quite a bit more. So if you're awarded that house in the divorce, if you plan to sell it soon, be aware that there may be some capital gains taxes, but you don't actually pay tax on the split.
Right.
One of the women that I spoke with, they owned 15 rental properties together, and they were looking at how they can equalize the value. So, one of them got so many and the other got so many, but the total value was more equalized. So it wasn't necessarily, they were trying to avoid some tax implications in that process.
Yep, that's smart. Another place I see that is with retirement accounts, because traditional 401ks, which are by far the most popular retirement accounts these days, you pay tax when you withdraw those monies during retirement. Whereas Roth IRAs, that tax has already been paid during the marriage. So in retirement, when you pull money out of a Roth IRA, there's no taxes owed. So it would be very unfair, even if you have two account statements, a Roth IRA account statement and a traditional IRA account statement. They may have the same balance today, but they're going to have very different tax consequences down the road. So that needs to be taken into account when you're equitably dividing the assets.
Yeah, there's so much to think about, right? As a business owner, and that's why you made the point earlier that you need to have a team around you, because you're going through all the emotional trauma, and maybe you just want it to be over with, and so you're willing to agree to things, but your team can help you think through it logically, so you have the best outcome to protect you going forward.
Absolutely, because like I said, this is probably the biggest financial transaction that you will go through in your adult life. Regarding the contribution piece, I wanted to bring up something because I saw recently, I think on Facebook, is, my husband has a retirement account and I never contributed to it. I feel bad for asking for part of it. And I would say to that person, don't feel bad. You may not have monetarily contributed to it, but if you supported your spouse during the marriage, and your spouse was the one that had a vehicle to save for retirement, that is a marital asset, and it's not, mean or vindictive or greedy to ask for an equitable piece of that.
Yeah, that's a very good point. So let's switch gears here. We've talked about, business owners, but let's talk about self-employment.
Okay.
That's a whole different ballgame. It's been said that there's no area of divorce law more misunderstood than business and income valuation when one party is self-employed. If you think about it, most family law judges don't have a business background. And family law attorneys are experts in family law, not necessarily business law. So you have to try to present your case in a way that the judge can understand. And what is the best way to do that? If you're self-employed, it's not as easy from a business valuation standpoint. So,
Well, so a lot of business owners are, obviously self-employed. And I think one thing that's important to do when you're presenting your case is to have a good understanding of the history of earnings and how your earnings have they been fairly steady? Have they, significantly jumped up and down over the years? So, is there a risk, I guess, that your level of earnings can continue into the future? That's definitely more of a concern when you're self-employed. Another issue when we see people who are self-employed is, has their business been funding some personal expenses? So I actually see that quite a bit. So, if someone were employed and received a salary, they may have to pay for expenses that a business owner might be paying through the business. And so the court needs to understand, truly what is this individual making, because their frame of reference is going to be people who are employed, right? So once again, I would definitely consider bringing in a team. I've seen so much over the years with self-employed individuals. One divorce that I had, the fellow was reporting that he made really very little. And for his profession, he was making much less than the norm. And that's one tool that we use, is there are a lot of databases for reasonable compensation. And he had essentially been paying for, their daughter's college apartment and charging that to his business's office supplies.
That's creative.
Yes, all of his travel. And he had purchased, taken private planes to purchase antique guns, and those were classified as office supplies. So a lot of times,
Man.
I'd like to see his warehouse for those office supplies.
Yes, a lot of times you can take a look at what the self-employed person is making and do kind of a sniff test. And another thing I like to look at is, okay, well, if this person is self-employed and let's say they have a college degree or even a master's degree or some type of certification, why are they willing to make so much less than what they could
make?
Yeah, you could just go on Indeed or Monster or LinkedIn and see what they could make if they were an employee. And I think the judge, will take that into consideration as well.
Yeah, I was thinking about that because some self-employed people, they operate on a cash basis for a lot of their business. So, that's not as trackable.
Right.
I don't know what you do in that aspect. And we talked a little bit about discussing hidden assets, but how do you go about it if somebody, is perhaps operating on a cash basis and you're trying to sift back through and determine what the reality is?
Well, so there's a couple of things that we would do. One, and I'm doing this right now in a case where it looks like the business owner is making less than a reasonable person would expect to make with his training. And so we actually looked back at the deposits to the bank. So, and not the tax return, not their profit and loss statements, but what was deposited to the bank account. Of course, if significant cash is paid, at the cash register, that may not necessarily pick that up. So one example I've seen, because we have tools for benchmarking, and so you can look at what the cost of sales is. This is really a great way to look at it for a restaurant, because if we know what the cost of food and other cost of sales for a restaurant are, you can essentially estimate what their revenues should be. Restaurants are an area that actually still have a lot of cash. These days, businesses don't accept a lot of cash. But what we also see is people might be getting payments from Venmo or PayPal
Right, yes.
that are not hitting the business's bank account. So that's another reason to have a team involved, because if you're working with an attorney and or a forensic accountant, we'll help make sure either via subpoena or through the interrogatories and requests for production that we get our hands on, crypto accounts, PayPal, Venmo, Zelle. I could go on and on, because
That's great.
sometimes those receipts are coming in different ways.
I was at a store run by a small business owner and was going to purchase something, and he said, well, if you pay cash, I can give you a discount. And I said, okay, yeah, I can pay cash. And I gave him the cash, and he put it in his pocket. And I thought, well, I guess that one's not going through the cash register.
Right. Oh, dear. And another thing that we will do is it's called a lifestyle analysis. And in that case, we're looking at, okay, well, what is someone spending? Because obviously, it's not sustainable to spend a whole lot more than you make year after year.
Oh, that's fantastic, right?
Mhm.
Yeah.
Yes. So in that case, we'll look at, what was spent on credit cards, what was spent on all the types of accounts that I just mentioned, and what it was spent on, and essentially present to the court, okay, there has to be enough income here to support
Yeah.
sometimes it's in the hundreds of thousands of dollars
Yeah,
that's being spent.
You
every
spent
year.
$100,000, but you're showing you only brought in $50,000. Where's the difference coming from?
Exactly.
Yeah.
Yeah, well, I want to ask a question. Can you share with our listeners what a forensic accountant is and what they can do in a divorce? And what's the difference between being a CPA and a forensic accountant? I mean, is this a person you have to hire separately from your CPA? Am I making sense?
Yeah, Pat, that's a great question. So a forensic accountant, the word forensic actually it comes from Latin. It actually means for the law. And so that's why, when you think of CSI and the forensic team, usually you're not thinking of an accountant because those people are with the forensic labs and such. But we're all, doing something related to the law.
Right.
So usually forensic accountants are already CPAs like I am, but have specialized training in the area of forensics. And so that could be understanding the laws of the state that relate to the areas of work that we do. It's really important for me to understand, even though I'm not an attorney, and I always suggest to my clients that they have an attorney, but still I need to know enough about how divorce works, how the divorce process works to be effective in what I do.
Right, because I know some people already have CPAs and maybe they're thinking they can use them, but they have to go a step beyond that.
Right. That is true. And in that case, a forensic accountant like me would coordinate with the CPA so that there is not duplication of effort.
Okay. Yeah, that makes sense.
Yeah, great. Well, Shannon, we've had a fantastic conversation today, and I hope it helps those people who are small business owners or married to a small business owner and they're facing divorce, try to figure out what do they need to do, what type of team do they need to have around them, and what their rights are in terms of the marital assets. So would you please share with our listeners how they can reach you? What's your social media and other contact information?
Sure. So my name is Shannon Farr. I'm on Facebook as Farr Forensic Accounting and Valuation. I'm on LinkedIn as Shannon Welch Farr. That's my maiden name. My email address is shannon.farr, Farr, at elliottdavis.com. And Elliott Davis, Elliott has 2 L's and 2 T's. And yes, I'd be happy to do a complimentary consultation and talk to people about their case and, give some advice. And if I'm able to help them or, point them to people that might be able to help them. I've been through a divorce myself that was finalized in 2022. And even though I've been doing what I do for a long time, going through that process, I think
Oh, yeah.
really opened my eyes to the emotional toll that people are going through. So, I'd like to help people get to the other side as often as I can.
That's great. That's great. Well, great conversation today. Very important information. And I'd like to let everyone know to please join us on our next episode and make sure to subscribe to the Silver Divorce Podcast. We welcome any questions you may have, and you may email us at silverdivorcepodcast@gmail.com or join our Facebook page at Silver Divorce Podcast.
And I'd also ask that if you are listening, please leave us a rating and a review. Ratings and reviews are very important to raise us in the algorithm so that we can be seen and grow our listeners, and then also attract great guests for you to bring you great content. So whether you are considering divorce or you are newly in the divorce process, we'll help you navigate, and we'll tell you things that your attorney might not tell you. Until next time, remember, divorce is an event. It does not define who you are. I'm Lisa.
And I'm Pat. Join us next time.